G'day guys, welcome back to the channel. Hope you're doing well out there. Another big week in Bitcoin land. They're only going to ramp up now all the way through to the euphoric peak. And the way things are shaping up, it's going to get pretty hectic. So best to strap in. Just remember what I said last week. If you didn't watch last week's video, go back and watch it again. You're potentially able to front run all of the institutions, all of the ETFs, everything, all the big players. Now, you've got to consider that. You've got to consider that. I've been telling people for years to get into this asset class. Just read a little bit of content, do the work, yet people are still going to miss out. And it breaks my heart. It really does. I just don't know how to convince people to work and learn about this asset more. I just don't know what I can do. But let's dive in. Here's Gary Gensler. So this week, it's a lot's happening about Gary. Basically, he has said in a roundabout way that the Bitcoin ETFs, some of the filings are slightly inadequate. Now, this is potentially a good thing because now the ETF applicants, BlackRock, Fidelity, ARK, you name it, they kind of know now. He's almost given them an in to what to fix to make sure they get through. Now, basically, it's just a really small surveillance thing, and they're all going to use Coinbase, the American-based ones anyway, and they have a surveillance sharing agreement. It's basically for AML, KYC stuff, which is fine. But along with this little piece of information, Gary has been on the nose. He's on the nose in Congress. He hasn't really been protecting the markets, and he doesn't just do crypto. He does all of the markets. Now, what you hear a lot, and if you're with Combank, you would have recently received some messaging to say, there's X amount of dollars done in fraud transactions and scams on crypto. What no one discusses is that in the stock market, the stocks, the indexes, the stocks, all of the publicly traded companies that you can buy and sell, there is 10 times more. The value of the dollars is 10 times more in fraud and scams. So, if he's worried about investor protection, 90% of his time should be in the stock market, not 100% of his time in the crypto market. But only time is going to tell if he has been an asset to Bitcoin or a burden on Bitcoin. It's really hard to say. It's just hard to say. But time is going to tell. Now there is a lot of chatter that he's resigned or he's been forced out. So I don't know what's going to happen. The video is slightly too early to have the true information. But at this stage, it looks like he's leaving the job. And we can only pray that Nutter Biden brings someone in who is pro-Bitcoin. I mean, there is a big risk here. He's on the nose, and we're coming up to an election. So I've got a feeling that he will bring someone in who's pro-Bitcoin or pro-crypto, or just lets things go through. Because it could backfire on him otherwise. And the guy is desperate. I don't know if he's even going to go in the running. Who knows what's happening over there. But a lot is happening with old mate Gary Gensler. Now, last week there was a really interesting interview with Jay Clayton. He is the ex-Gary Gensler. So he was the SEC chair prior to Gary Gensler. Let's listen to what he had to say about Gary when he was interviewed recently on CNBC.
Let's take this to a very high level on the regulatory side. What you're hearing from the leaders of the regulatory organizations is if we're not losing cases, if we're not being pushed back on by the courts, we're not doing enough. Think about that for a second. That is a fundamental shift in how we as Americans view the role of the government. I don't want to be in a place where I know the government is going to bring cases they think they're going to lose. Imagine you're the person who is the subject of that case. Now, we're talking about corporations.
Yeah, to see if they can, and if they're not stopped, they're going to, yeah.
Right, but this is an ethos now, which is, unless we're losing, we're not bringing enough cases. That may be fine for private litigants against each other and think about, but when you have the power of the state, and you're supposed to only bring cases and only make rules that you think are going to pass judicial muster.
So not too good there. Not a good vibe. But let's just forget about the SEC for a second and let's think about the world and the big players in the economy. And all of the list of people that I showed you last week. Again, if you haven't watched last week's video, go back and watch it. Every man and his dog, Tom, Dick, and Harry are all coming for Bitcoin. They're coming for your Bitcoin. They want it. And it's happening fast. Let's look at these articles that came out this week. Spain's largest bank joins list of financial institutions exploring Bitcoin. HSBC becomes first bank to launch Bitcoin and Ethereum ETF trading in Hong Kong. Credit Agricole is looking to do crypto custody in France. Citadel, Fidelity, and Schwab have started their own exchange, which is just for institutional investors on Wall Street. We've got every bank in America basically has applied for an ETF, or every hedge fund. And we've got Georgia, the government of Georgia now, have partnered with Tether because they're going to make Tether interoperable in their transactions and via Bitcoin. So, I mean, listen, what happens here is very clear. The FUD gets your mind. It gets you. It's designed to trick you into making bad decisions and missing the boat when it's sitting there at the dock waiting for you to jump in. It's a very funny thing. And what's really more important for people to think about is this. There's someone who's written these articles. People know about these releases way before we do. Way before. Days before. So everyone knows that the banks are coming for it. Everyone knows that the ETFs are being applied for and launched. I mean, and you're still afraid of FUD about the fucking mining or concentration of coins or like regulation? I mean, what are you doing? Every man and his dog is coming for this thing. You need to get on. This is your last chance to potentially get in before the big guys. Once they're in, it is game over. You will never ever see these prices again. Oh dear, makes me sad. Now, let me put it into more perspective for you. Here are the applicants for the Bitcoin ETFs, and some of these are international. These funds add up to $27 trillion under management. Now, they're obviously not going to put their money, all of it, into Bitcoin. Let's be honest. Let's look at this little summation here. Look at the names. These are very reputable names. BlackRock, Fidelity, Morgan Chase, Morgan Stanley, Goldman Sachs, BNY Mellon, Invesco, Bank of America. Who else do you need to see to have some trust in this thing? What would the price do if these guys all put 5% of their assets under management into Bitcoin? So this calculation was done by Willy Woo, so I trust it. It would make it 310 grand per coin US. Now, 5% may be a bit much, but either way, there's going to be a swath, an absolute huge sum of money coming into this thing. It's going to do a double easy. But, you know, don't take my word for it. Look at the information for yourself and make your own decision. You need to be not buying unnecessary cars. I mean, this is the time right now to be stacking sats, quite frankly. It's almost never been more risk reduced ever. So, you know, whatever. On top of that, Michael Saylor is adding more Bitcoin. Oh my God. The guy's a machine. Now, he's worked out the system. Now, I'm just going to explain to you how he's worked it out. MicroStrategy issued and sold another 330 million worth of their shares and bought another 12,332. This takes them to over 500,000. Over 150,000. So they're now 152,000. But what he's doing is ingenious. He's diluting his shares. He's diluting the shares in his business, getting money, and then he's buying the hardest, soundest asset ever to be produced, and that's Bitcoin. Now, the guy's, he's 25 steps ahead of everyone else. It's mind-blowing, because what will eventually happen in time is countries will print their own currency, like how they do now. They just poof out of thin air, and they'll be buying Bitcoin with it. So you have to understand the scramble that's going to eventually happen here. It is going to be absolutely insane when it happens. Might not be this cycle, might not be the next, but at some stage, there will be countries that print their own currency to buy this. And that is a crazy thought. Here is just another visual just to help you wrap your head around the potential of this thing. It's not a share in some tiny market like Australia. It's not that. It encapsulates every market and every person in the world. It can get a share of everything. Look at the chart. Look at this. Look at it deeply. What do you see? What do you see? Rational root, another good set of data here. Last week's chart was one of the best I've seen visually of supply, but this goes further on the illiquid supply discussion. So you can see the halvings here. We're on the way to halving 4. We're about 80% the way to the next halving. It's a big moment in time. And what is happening is the illiquid supply is going up. It's going way up. So something happened. Well, it was obvious that it happened in 2020, right when basically Michael Saylor bought all, right when we were coming out of the pandemic and the money printing was out of control. People woke up and something happened. There was a mass consciousness occurring. People realized very quickly that they need to hold the scarcest asset in the world, and the entire market changed its direction on exchanges. So people no longer held them on exchanges. They took care of their own keys. They did the easy. It's so easy to hold your keys, to hold your Bitcoin in a secure manner. It's almost ridiculous. And this is only going to increase. We're not even at the halving yet. So imagine by April or May of 2025, the hodling is going to be extreme. There's going to be barely any Bitcoin on the market to even trade or to buy. So, I mean, I guess I'm warning you here. I'm warning you. Work out a way to get at least some coin here and sit on it and watch it happen. It's going to be exciting enough. The volatility will be exciting enough. That's all you need. And here we go. So this just compounds what I was just saying. This shows, again, from the rational root, the progress towards the next halving. We're at 79% or probably 80% now. But Samson Mao makes a great point here. Assuming a constant Bitcoin price of 30,000, MicroStrategy buying 1.3 billion a year and Tether buying 900 million a year, because Tether have announced that they're obviously putting that on their balance sheet, which is normal for any business who is rational and who's actually looked at this thing with any depth. So in 2023, the two entities absorbed a combined 22.7% of annual supply of Bitcoin. In 24, that'll be 32.1 of the supply of Bitcoin, new supply. In 25, it'll be 45.49% from two businesses. Now, I'm going to say that again because it's quite hard to wrap your head around. All of the new Bitcoin being produced per annum, currently per day is 900 Bitcoin. Once the halving hits, it'll be 450 per day. Just two businesses are going to eat up 50% of all of the new supply. Do you know what that means? It means that there's not going to be a lot left for everyone else. And when things get scarce, you tell me what you think is going to happen. I mean, I'm giving you the playbook here. Blueprint. It's just, I'm like, it's just... So I've just got a few more interesting data points. I'm just trying to reinforce a few things here for you. Now, a great point. This is a great chart. Very, very visual. Very, very good to compare. There's 3 US-based public companies in the S&P 500 that hold more than 10,000 Bitcoin on their balance sheet. That is MicroStrategy, Marathon, which is a miner, and Tesla. They've still got 10,700 Bitcoin on the balance sheet. And you can see here, they're comparatively, when you compare them against the S&P over the last 5 years, I mean, maybe it's a big coincidence, as is said here, that these companies have outperformed the S&P grossly, but maybe it's not a coincidence, and maybe that their decision regarding Bitcoin is the sound decision. And in turn, look, if this goes on for another 5 years, and let's say there's only these 3 companies who have got it on their balance sheet, and these 3 companies continue to outperform the S&P, don't you think that other companies are going to put some of these Bitcoins on their balance sheet? That would make sense, no? Something to think about. There's a lot of companies with a lot of money out there. There's not a lot of Bitcoin left. Now, if you want to look into who's doing what, this industry is so clear. It's brilliant. This is the treasuries. Go click on this. I'll put the link in the description below. This will show you all of the public companies, all of the countries, everyone who's holding Bitcoin on the balance sheet. The governments, the whole lot. It's a great set of data, and that's the beauty of Bitcoin. We can see where all the funds are. We can see it all. So check it out. It's worth your time. Another little Charlie Biello sort of comparative chart here. Always nice to look at. Very similar to what we looked at last week, but just in a different format. Again, I need to stress this too. Bitcoin cumulative annualized return is 150%. It's pretty solid. Now, what's even more impressive is out of these last however many years, 13 years, 12 years, Bitcoin has been the number 1 performer in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years. It has been the best performer. And I'm still trying to convince people to read the Bitcoin Standard. I mean, what is going on? Oh, God. The legacy finance folks have no clue. They really don't. And I don't know what's going to make it click. I think we have to have some sort of crazy event happen where Bitcoin decouples and just does all sorts of stuff. Or the only way for people to learn, and Matt Odell says this really well. Matt Odell says that the only way people are going to learn to self-custody and to learn about Bitcoin is through getting rugged, as in having exchanges collapse on them. To learn about the best trade of Bitcoin, sometimes you have to get burnt. You have to touch the stove and burn your hand, and then you learn. And this may be the case on the bigger picture too. What is it going to take for people to learn that the sovereign nature and the scarcity of Bitcoin is an incredibly uncorrelated asset that really everyone should hold in their portfolio? So this is a 2-year moving average multiplier. And I just wanted to quickly show you this because we're still in a good buying time. I know that's hard to believe because we're 100% off of the lows, but this little green section here, historically, when we go under the 200, the 2-year moving average, this has always been a great time to add exposure to your portfolio with Bitcoin. So you can see here, it's another one. This is very low price, and then we went on a big march. Even there, when we had the COVID dump, that was a good little time. It was a very short window. Oh, now, we've been in this adding phase now for a very long time. and we're coming out of it. And once we're out of it, it's hard to see that we're going to look back. We might, but there's every chance that, you'll look back potentially like here and like here and like here, and you'll go through the next year and a half, 2 years period, and you'll go, that was a really good buy. 30K, sub 30K US was actually a fantastic time for me to be buying Bitcoin, it turned out. And we're looking to get up to the red line. So, it's not rocket science. It's just not rocket science. Look at the history. The thing rolls in waves. The halving is an event that impacts how Bitcoin operates. Your time is running out. Here it is zoomed in. Just wanted to stress this a little bit more. This is it zoomed in. We've had a long period of time now. So don't miss the chance, guys. Share this with someone in your family who needs to see that they're sitting on the sideline in cash and they could potentially be holding the greatest asset ever produced to be purchased. Now we continue to get addresses with more than one Bitcoin in them. This is just going up now at a good rate of knots. So this is really what we want to see. We want to see a lot of people holding a single Bitcoin or more or less, quite frankly. It doesn't really matter. You just get as what you can when you can. And as long as you've got a long time horizon, it can work out in your favor. So another interesting data point here, which is addresses with more than one Bitcoin is just going up like at a rate of knots. It's a beautiful chart. Wow. And that's all for today. I feel like I've given you enough stuff to think about for one video. Keep stacking the sats if you can. Stack them up. Thank you for watching. If you've made it this far, huge effort. It's been a long one today. Stay well out there. I'll be back next week. We'll have more answers on the Gary Gensler situation, and a lot more action will be occurring. I sort of have a feeling. But stay well out there. Have a great week. Look after yourself, and bye for now.